Hey everyone, welcome to this technical outlook video. It's going to be a few busy days ahead, particularly the second half of this week. The Bank of Japan meets this Thursday, and while no rate hikes are expected, dollar yen has already staged a nice rebound. So the key question will be whether that recovery could continue in this week as well. Meanwhile, in Europe, Eurozone CPI inflation figures might affect euro dollar as the central bank is expected to cut interest rates as soon as in June. And US, we are also expecting a flood of US data, including the core PC inflation, GDP growth figures, ISM, manufacturing PMI, as well as the all-important Nonfarm Payrolls report. So all these could affect dollar volatility. And at this point, I would like to show my analysis on Bitcoin because that has been outperforming key assets such as gold and Wall Street last week. So it's going to be interesting to see whether Bitcoin against the US dollar could continue its upward path this week. So starting first with dollar yen, we can see that the price has just rebounded around the 140 territory. That area has been a key floor for a couple of, for almost 2 years, let's say, since the end of 2023. And now the key question is whether that rebound will continue. We have the Bank of Japan policy meeting on the calendar this Thursday. We don't expect any rate hikes, and it seems that investors have already lowered their rate hike forecasts as the trade war could affect Japan's trade activities, although the US president has postponed its reciprocal tariffs. Japan could still be affected by those carbs. So it will be interesting to see what is the outlook by policymakers and what are their expectations about their rate hike cycle. Any indications could about when the next and if the next rate hike will happen could create fresh volatility in dollar yen. So from a technical perspective, we can see that the price is near key resistance territory, just around the 144.20 level, and the 20-day exponential moving average over here. We have a constraining key line, a former support trend line, which the price broke back in April, earlier this month. So a close above it could create more upside, likely driving us up to the 145.40 zone, where another constraining line is located. While higher than that, I expect a tough battle somewhere between the 50-day exponential moving average and this resistance, tentative resistance trend line seen somewhere between 147.15 and 147.85. It's important to note that the 38.2% Fibonacci retracement of this downfall is also within this place. So a successful penetration higher, sustainable close above this region could confirm additional gains, likely towards the 149.40, 150 zone, where the 50% Fibonacci mark is placed. Now, in the event the price pulls lower, and in this case, particularly we need the Bank of Japan to resume its hawkish tone. So any hawkish messages could strengthen the yen and therefore add pressure to this pair. Weaker than expected US data could also negatively affect this pair, in which case we could see a pullback towards the recent lows near 139.30, 140. There is a support line over here within this region, while lower than that, the 137.70, 138 region could be another pivot point. And looking at technical signals down here, the RSI and the stochastics seem to have resumed their upward path, but the RSI is still below 50, and the stochastic oscillator is already near its 80 overbought zone, which suggests that downside risks haven't really faded out. And now looking at euro dollar, Eurozone CPI inflation figures are expected to come in mixed. The the headline CPI could ease to 2.1% from 2.2% previously. The core measure, however, could rise up to 2.5%, slightly higher than the previous month. So that could be a mixed report. However, what we are looking to see is whether there are any indications that tariffs on US tariffs on cars have already started to affect prices. Probably it's too early to see the impact on the data, but any deviations from forecasts could, of course, make the pair sensitive to the data. And from a technical perspective, we can see that euro-dollar has pulled below its 3.5-year high of 1.5072 last week. It's still in a consolidation phase, but encouragingly still above the 1.13 level. We can see that there is a constraining line here, a longer-term one near 1.1290, which could support the market, preventing a downfall towards the 1.1175 and 1.12 territory. The 20-day moving average, as well as another key line here, a longer-term line here, can support the market. If not, then the focus will turn back to the lower boundary of this bullish channel seen near 1.09, 1.1030, slightly lower. There's another constraining zone where the 50-day moving average is converging at 1.0975. Well, from a technical perspective, the technical indicators cannot really guarantee an immediate rebound. We can see that the RSI has resumed a downward path. The stochastic oscillator is also falling, but it's already near its 20 oversold mark. So some caution is still needed. However, if we successfully close above the 1.14 territory, then we may see another test near the 1.1513 constraining zone, and then above that, the 1.16 region could be important to watch, because that's where this former support turned into resistance trend line is placed. And finally, looking at everyone's interest favorite asset, Bitcoin against the US dollar. Well, we have some positive developments. It seems that China is interested to sell some of its US treasuries to invest in Bitcoin and gold. We also had some encouraging legal developments. The Trump's administration wants to tweak a controversial regulation against cryptos. So all this has probably been supporting Bitcoin over the past couple of sessions. And what's interesting now is whether the US data could also help Bitcoin to continue higher. According to forecast, US GDP growth is expected to slow down significantly quarter on quarter in the first 3 months of the year. ISM manufacturing PMIs are also expected to slow down, and the core PC inflation index could also ease, while non-farm payrolls are expected to show a slower jobs growth, which could also be negative for the US dollar and therefore positive for Bitcoin. However, what's interesting to see is whether we will have any inflation spikes, and perhaps we may get better updates from the ISM manufacturing PMIs for April. Meanwhile, if the unemployment rate stays stable and average hourly earnings also head higher as forecasts project, that could also limit downside moves in the US dollar. Now, as regards Bitcoin, well, from a technical perspective, we can see that we have a bullish hammer candlestick pattern that is currently developing. If that is confirmed, we could see more upside, particularly if we close above the 96,000 level. Then I expect the next test to take place around this resistance line, which seems to be the upper band of this bullish channel near 98,400. Then above that, the 78.6% Fibonacci retracement of this downfall at 101,840 could be the next target. There was some consolidation around this territory. And we could see a pause before the next barrier at 105,000 comes into view ahead of the record high of 109,071. Well, if you look at the RSI and the stochastic indicators here, however, we can see that both are in the overbought zone. So what does this mean? This means that upside pressures may soon fade out, or we could see a weaker positive momentum in the coming sessions. So if we hold below the 96,000, then perhaps the 91,760 region, which is the 50% Fibonacci retracement level of this downfall, could come back under examination near 91,760. Below that, the 200-day and the 20-day moving averages seen between 87,850 and 89,550 could be the next pivot point. Even though if we see additional declines, then the focus will turn to the 23.6% Fibonacci of 82,800. Lower than that, the price could retest the broken resistance trend line of this bearish channel seen near 78,980. So that's everything I wanted to share with you guys. Thank you for watching. If you liked my video, please subscribe and follow this channel for more updates. Thank you for watching and see you next time. Bye bye for now.